Hello, everybody. In this session, we are talking about bank institution. A bank is a financial institution that is licensed to accept checking and savings deposits and make loans. Banks also provide related services such as individual retirement accounts, certificates of deposits, currency exchange, personal loans, and safe deposit boxes. There are several types of banks, including retail banks, commercial or corporate banks, and investment banks. And then we move to banking institutions in Indonesia. Indonesian banking, in carrying out its functions, is based on the principle of prudence. The main function of Indonesian banking is as a collector and distributor of public funds and aims to support the implementation of national development in order to increase equity, economic growth, and national stability towards improving the welfare of the people. Based on the law, the banking structure in Indonesia consists of commercial banks and bank or Bank Perekonomian Rakyat or BPR or a rural bank. The main differences between commercial banks and BPR are that they cannot accept deposits in the form of demand deposits, cannot conduct business activities in foreign exchange, and have a limited range of operational activities. And then we move to the types of banking. The first type, retail banking. Retail banking provides savings and current account services to individuals. People use this to manage their daily transactions and savings, so personal loans and credit cards are also available for this purpose. And then the second, international banking. A banking system that functions internationally may offer services such as cash transactions across borders, international trade financing, and similar practices. These services are very useful for the companies which are involved in trading all over the world. And then the third, commercial banking. Commercial banks offer services to businesses ranging from startups to large corporations. These banks receive business deposits and give them a secure place to store their funds. Additionally, these banks give out loans and credit facilities for operations and investment purposes. And then fourth, online banking. The adoption of the internet and smartphones has amplified the use of online as well as mobile banking. It allows customers to complete banking activities from any place. Most banks offer strong online and mobile banking platforms. Customers can enjoy a wide range of digital services and enjoy hassle-free banking. And finally, fifth, investment banking. Investment banks provide services in the field of complex financial transactions. This includes mergers and acquisitions for growth. They also provide services to investors, offering advice as well as strategies to companies and rich individuals who want to grow their wealth with investments. And then we move to principles of banking. The central practice of banking consists of borrowing and lending. It is in other businesses, operations must be based on capital, but banks employ comparatively little of their own capital in relation to the total volume of their transactions. Instead, banks use the funds obtained through deposits and as a precaution maintain capital and reserve accounts to protect against losses on their loans and investment and to provide for unanticipated cash withdrawals. Genuine banks are distinguished from other kinds of financial intermediaries by the readily transferable or spendable nature of at least some of their liabilities, which allows those liabilities to serve as means of exchange, that is, as money. And then, what is the importance of banks? The various reasons that highlight the importance of banks are the first, growth and innovation. Banks play an important part in financial growth and innovation, by offering capital for research and development activities to support all the latest technological advancement and ideas. And then second, job operation. The banks also contribute heavily towards job creation, both indirectly and directly. They use many individuals in different roles, right from managers and financial analysis to loan officers to tellers. And then third, financial strength. Banks provide financial strength to the Indonesian economy by managing the flow of funds and credit in the financial system, which in return stabilize the financial conditions. And then how banks make money. Banks won't just keep the money a person or company has deposited in their vault. Technically, when you deposit money into a bank, you will be lending the money to the bank. This is where interest comes from, although more on that in a short while. The other services that our bank offers will come in the form of lending. They will do a lot of lending. They will offer home mortgage, loans to businesses, investment projects, investing in the stock market, etc. When they invest in these projects, they are not investing with their own cash. Instead, they are investing with the cash lent to them by the people using the bank. When they lend out money, they will be doing it at a high interest rate. Historically, they would have been lending at a 6% or more interest rate. Although this number can vary drastically nowadays due to the deregulation of banks when in the interest of competition. I think it is enough of this session. Thanks for watching, and don't forget give this channel with your like, comment, subscribe and share. Thank you.